profitable among both of them. The key reason why Ambuja Cement's numbers will look better, it has no exposure to South India. At times, no exposure to South India. They've missed out on higher realizations. This time around, it'll hold them in good stead. So on the top line, growth of around 3.5%, good going over there. Ambuja Cements as well is a tad bit more expensive than ACC, but the street has always given it that leeway. In terms of EV per ton, it's around $180, $190 per ton. 15 times EV on EBITDA, 28 times forward earnings. So it's not cheap. But getting back to their numbers, top line growth, I said, that's because of higher realizations. They have a fair bit of the exposure to North India. That's what will help them. Their exposure to South, their exposure to West India, that's not really going to help them. But North and Central markets have been good. That's what boosts the realization. Volumes, flattish or maybe 1% up or 1% down. We are working with a number of around 5.95 million tons approximately. Soft demand in West India, that's what will hurt them a tad bit. In terms of operating profit, a lot of rumors going around, but on the operating profit, we're expecting a growth of around 30 to around 35%. And margins, remember, we are factoring in a good 400 plus basis points in terms of margin improvement. The reasons for that really are pretty clear. That's because, in fact, we have been seeing that they've increased their exposure to pet coke. We could get the EBITDA per ton actually first up for you. We are working with the EBITDA per ton of around 810 rupees per ton. That's a sharp improvement if you take a look at it in comparison to the last few quarters. The cost efficiency measures should tick in. And also, they have increased the exposure to pet coke. They used to use around 40% of the total requirement via the pet coke route. Now it's increased to around 60%. That will play a big role over here. Profitability as well, more than 50% higher. Same reasons playing out over here. Operating profit higher, as well as higher other income. I hope, Rima, actually they deliver, because just take a look at the stocks. They're already factoring in very, very good numbers. But as I said earlier, not as cheap as they were maybe around 6 to around 8 months back.